Every market cycle creates its dominant narratives, and it leaves the average investor confused. Now, at times, they revolve around interest rates, and at others, growth or recession. In 2026, one thing is very clear in the U.S. market. Thematic ETFs have secured a definitive place in how investors seek exposure to long-term trends. But the right question isn't which ones are booming. It's why they're booming and how to invest in them without falling into traps. If you don't know me yet, it's nice to meet you. I'm Chad from Zero Markets, and on our channel, the goal is to bring market insight and investment guidance for traders and investors straight to the point and grounded in our experts' knowledge. Moving on, thematic ETFs emerged from the need to simplify access to major economic transformation. Instead of choosing a single company, investors buy into an entire thesis. In 2026, this has become even more evident as the U.S. market has grown less tolerant of isolated bets and much more focused on structural trends such as advanced technology, artificial intelligence, energy transition, cybersecurity, and cutting-edge healthcare. The reason these thematic ETFs are booming in 2026 is not hype, guys. It's strategic allocation. Large asset managers know it's difficult to predict which company will ultimately win a technological revolution, but far more likely to identify which sectors will continue to receive capital, innovation, and government support. ETFs offer an efficient way to capture this movement without relying on a single balance sheet or CEO. The common investor mistake is treating thematic ETFs as short-term trades. Many enter when the theme is already headline news, without realizing these products are designed to track long cycles, often with significant volatility along the way. In the U.S. market, more experienced investors use thematic ETFs as part of a portfolio, not as a primary bet. They understand that strong trends don't move in a straight line. Another essential point is the difference between narrative and fundamentals. An ETF may have an attractive theme while still holding unprofitable or highly leveraged companies. In 2026, the market is more selective. ETFs that combine a clear thesis with financially solid companies tend to withstand correction periods more effectively. This is where analysis matters. Understanding what's inside the ETF is more important than its name. When used correctly, thematic ETFs help investors position for the future without trying to predict tomorrow. Offer diversification, thesis clarity, and global exposure, all very much aligned with the long-term American investment mindset, but they require patience, discipline, and risk awareness. Thematic ETFs are not shortcuts to quick gains. They're tools for those who want to invest in major movements with method and strategic vision. In 2026, investors who understand this stop chasing hype and start building positions intelligently. If this content made sense to you, hit the like button, subscribe to the channel, and comment below. Do you prefer investing in individual stocks or in thematic ETFs? In the next videos, we're going to keep exploring how to build a future-oriented portfolio without emotion and without improvisation.